everyone. A very good evening. You're watching The Money Show on ET Now. I'm Mubina Kapasi. This is your daily dose of 1 hour long personal finance. Well, today we'll be taking forward the conversation with respect to discussing the RBI's big announcements after the Monetary Policy Committee meeting, which took place last week. Of course, among the other key outcomes was the fact that the RBI held steady on the repo rates. So, no change on that front. However, there are quite a few other significant changes that took place, or rather a significant other whole host of breathers coming in for households, especially those who have taken loans, personal finance, or a personal loans, pardon me, or any other kind of loan. Furthermore, gold loans have become now all the more attractive, not just because of the fact that gold prices, of course, are now perched at 55,000 and beyond, but also now the RBI has allowed for a value of 90% of the gold to be given as a loan by banks or other gold loan companies. So this definitely is something that will lead to you getting more buck for your gold from a loan perspective. So these are just two of the interesting announcements coming in from the RBI for households. So we'll be discussing that later on the show. We'll also be talking about the new Consumer Protection Act. And finally, in our Spend with TMS segment, we'll be talking about the whole host of new mobile phones and different gadgets that were released last week, including some that are still on sale. And we'll be bringing you the 5 gadgets that you need to make your home more conducive to working from home. But first up, let's bring on board our very first guest to talk about the whole host of RBI announcements. I have with me Raj Khosla from My Money Mantra. Mr. Khosla, thank you for joining us today on ET Now. So to start with, I think the big headline that was from a personal finance perspective and from a household perspective, apart from the interest rate status quo, has been the fact that there is now a loan restructuring option available for individuals. And of course, this is perhaps coming in also as that moratorium period ends by the 31st of August. So if you're still facing the cash crunch, here's an option of restructuring. But what exactly do you mean by this whole restructuring activity? If I have a loan and if I'm struggling to repay it, what is this restructuring option available to me?
Well, first up, Mubina, it's so nice to be with you again. Thanks for inviting me. With respect to the announcement by the RBI, I think it is a really proactive and positive development, and they acted well in time. It wasn't one of those things where that it's a last minute .com type of situation. Their personal loans, whether they're home loans or their credit card outstandings or their car loans, any of these personal finance items, if any particular borrower feels that he's not able to service his EMIs between now and before 31st of December, he can approach the lender and ask to readjust, these repayments. And I think that's a really positive move, because the option was to give a blanket moratorium or to extend the moratorium for another 3 months, 5 months. I think that would have been counterproductive on many levels. So this is, it's excellent that any borrower who feels that he's unable to service his EMIs, he can approach the bank for restructuring.
Okay. Mr. Khosla, now, when we spoke about the moratorium, the twist over here was that many banks were essentially charging interest on interest. So let's say even if I take a 3-month moratorium, either the subsequent month EMI amounts would go extremely high, or my EMI period, my loan tenure would be extended. So let's say if I've taken a home loan maybe with a bank, and it's a 10-year loan, the next thing because I've taken a 3-month moratorium, they're extending my loan by another 8 or 9 EMIs. So essentially we understood the concept of interest on interest. Is restructuring different from that? I mean, how should I be careful that there are no hidden extra finance costs or interest costs that would be applicable here, just like it was in the case of the moratorium?
I have a slightly different perspective on this phrase, interest on interest. Actually, it was an interest on EMIs due, and any equated monthly installment has a portion of principal and a portion of interest, and that's the amount due to the bank. Now, if this repayment is postponed, certainly there's a cost involved for postponing that. So it isn't interest on interest, but let's leave that for the time being. As far as moving ahead is concerned, what you should watch out for, Mobina, first up, I think all of us should wait for the recommendations of the Kamath Committee. Because once they are out, and also each board of the bank has also interpreted those and laid out policies for restructuring, only then can we actually interpret the fine print. In the absence of which, the only thing one can say is, like you quite rightly point out, that be careful of any hidden charges, hidden costs, which are over and above what might be an interest cost on the amounts which you are trying to delay, as in take a moratorium or maybe a gap of 1 year or 2 years max, to repay. So if there is an interest cost thereon, that's fine. If there's any other cost, any fees, any charges, any hidden charges, that is something that every consumer should look out for. But wait for the Kamath Committee report, wait for each individual bank to come out with its policies with respect to restructuring before you actually take a decision. But, an overall point, if you have the money to repay your loan, repay it. It's a restructuring should only be availed of as a last resort.
Restructuring should only be availed of as a last resort as far as possible. Do try to service all your loans and your EMI payments absolutely in time. Mr. Khosla, who would be eligible for these restructuring options? And also, I think what's interesting to understand is, from what we understand from a preliminary reading, is that every bank will have a different criteria. So does it mean that if everybody today, if I have a loan and I think I may not be able to pay it, can I expect a call from my bank? Can I expect to sit across the table with my banker and sort of tweak my repayment terms, so on and so forth?
Well, broadly speaking, because we haven't seen any individual policy as yet, but broadly speaking, don't wait for the bank to call you. In case you feel you need to restructure your loan, then you need to be in touch with the lender and invoke these guidelines to say that I need fresh terms and tell me how can I repay this loan. And one good thing is that if you stick by whatever it is that you decide in terms of restructuring, it will never affect your credit score. And whilst we are at it, with your permission, Mobina, I would like to say that not only is this all about the borrowers, it's also about the lenders. Once the fog of war, as it were, clears out, then even the lenders will be able to go into the market and extend credit, which currently they're not able to do because they're unable to assess the credit worthiness of the borrower. So this provision helps the borrowers. It also helps the lenders to get back into the market. So all in all, it's a win-win.
Okay, that's very interesting. So yeah, even from a lender perspective, it will sort of assist them, because all of them are of course struggling with the huge surge in NPAs as well, especially after the end of the loan moratorium period, right? I mean, earlier in the day as well, we at ET Now have been speaking to a whole host of NBFCs and lenders, and they said that yes, we perhaps are preparing for a wave of NPAs to hit after the 31st of August. Many of them have been taking additional provision from now itself for the same. But yeah, maybe this restructuring exercise would sort of aid lenders as well. So like Mr. Khosla mentioned, it would also be a win-win. Mind you, here personal loan includes everything, all loans borrowed by an individual. So go, an education loan, it could be a car loan, it could be a gold loan, a home loan, consumer durable loan as well, right? Sometimes we borrow money to buy consumer, electronic goods or maybe revamp our home. So it includes that as well. So if you feel that you may not be able to service these loans properly, this option of restructuring is there. You should immediately call up your bank and sort of talk to them about whether you would be an eligible candidate for restructuring. All right. I want to talk to you about gold loans now, Mr. Khosla. There's this big leg up that has come in. Firstly, not only have prices surged, so any which ways, today, if I will go to, a banker with gold, I will be getting more than what I would have got probably even 7 to 8 months ago. But additionally, we have this high LTV as well. So, Mr. Khosla, my question is, in India, unfortunately, the one thing that's pretty rampant is you have a lot of these unlicensed shadow money lenders, if you could call it that, who ask for gold and then lend money, especially, in the tier 2 towns and the tier 1 towns. Is this now a much more viable option that's available for these individuals who have to resort to these unlicensed shadow money lenders, if you could call them that?
Yes, indeed it is. Yeah, and well spotted. Like they say, all that glitters is not gold, but frankly, in this case, gold is really glittering. In recent months, the price has risen by 30%, and now that the RBI has permitted a 90% loan-to-value ratio as opposed to the earlier 75%. But mind you, this is only for banks; it's not for NBFCs. Only the banks can go up to 90%. But that in and of itself, is a really superb measure. It helps unlock, unlock the value of your asset in a somewhat unobtrusive manner. You don't have to either go and mortgage your home or to leave your shares, which, by the way, is only maximum 50% of the market value is available as loan. Here's 90% of the value of the gold, and also the interest rates are competitive. So all in all, I think this was another superb measure by the RBI. Full marks to them.
Mr. Khosla, if let's say, usually you take a gold loan for personal purposes. In today's age, maybe people are taking it because they have to, maneuver through a cash crunch that they may be facing, maybe because of disruption faced to their business or incomes. Between a personal loan and a gold loan now, do you think a gold loan would be a better and a more prudent option? And any which ways, in an Indian household, gold is that one item that will be available in every Indian household, right? So it is quite an easily available option as well for households to take a gold loan. So would you suggest that maybe a gold loan would be a better option than a personal loan?
Yes, indeed it will. Yes, well spotted again. It will be a much better option for personal loans because there is hardly any room for assessing the creditworthiness of the borrower. It's the gold in hand that that is assessed, and then you can avail of funds against that. With respect to personal loan, you will have to go through the rigors of being assessed whether you are creditworthy or not, and also the interest rate could be higher than the one that you would get against a gold loan. So it's all in all, a gold loan in the current situation could be a better option as opposed to a personal loan. It will be quicker and it will be less unobtrusive.
All right. Okay. Finally, another very important announcement by the RBI was this additional special liquidity facility to NHB. Now, maybe for a lot of individuals out here, all of these could be very jargony terms, right? Special liquidity facility, NHB. But I think if Mr. Khosla, you could break it down in crude terms for us. They are giving more money to the National Housing Board, who in turn will give it to, housing financing companies, from whom customers like you and me will borrow money to buy a home. So simply speaking, if today the central bank is pushing more money into the hands of these housing finance companies, and that too at repo rate, which is at 4%, today if I want to go to an NBFC and say that, look, I want to buy a house, I want to take a loan from you, will it be easier for me to get that loan approved for myself, and B, would the interest rates now be more attractive?
It will be easier for you because the liquidity on hand has been, and again, quite rightly, this is the second tranche of additional liquidity that the RBI has given to the National Housing Bank, and eventually it will reach customers like you and me when they want to go and buy a house, and we will have easier access to a loan. Your second question was with respect to the interest rate. I think that interest rates have never been lower, at least in recent memory, than they are currently. In fact, I would go so far to say that if I was to buy my dream home, now's the time to do it. You can get a loan and at the cheapest possible interest, and guess what? the price of real estate is also rock bottom. There's almost unending supply. So put these two factors together, best time for the consumers to reach out and actually, acquire their dream home, something that they wish to settle in. But mind you, no speculation here. I would rather say that buy a home that you wish to occupy for self-occupancy purposes, not for investment. Now is not the time for taking risks. But yes, do take that loan, which you will get easily. You will get it at lower rates, and the price of real estate being as low as it is. Buy a home that you intend to live in.
Okay, so for all you people who have been hunting for a house of your own but are either not finding a good property or you're not getting a good price for it, now is the time, because not only have property prices sobered down quite a bit because of the COVID crisis, many people say it is a buyer's market out there, but you also do have this abundant liquidity in the system because the RBI has been pushing it. They've done it now through the NHB. This is the second tranche. So perhaps if you will go over to an NBFC or a housing finance company and say that, look, I want to buy this house, for my, and yes, very important, this should be for you to live in. Maybe this is not the right time for investment, but if you're looking for a house for yourself to live in, a loan as well will be easily available. And, Mr. Khosla is advocating that now would perhaps be a good time, to invest in your own home. All right. Well, let's take on board some questions and queries then. And our very first question is coming in from Viswanathan. He says, I was planning to take a loan by mortgaging some shares. He asks which loan is suited for this, and would you suggest I take a gold loan instead of this? Mr. Khosla?
Indeed, we already answered that as a matter of fact, but yeah, once again, you must take a gold loan, certainly, when compared to loan against shares. Gold loan is easily available, and, regardless of, I'm sure you have great credit credentials and a great credit score, and you would get a home loan in any case. But honestly, if you have gold which you're not using, put that money to good use, and go ahead and take a gold loan. It will become at bargain hard. You will get, I think a fairly low rate of interest, and that would be the way to go.
Okay. Instead of a personal loan, instead of any other kind of loan that you may have taken for your personal needs, it's always better to take, a gold loan, better and favorable terms as well. All right, let's take on board just one more query meantime, and this one is coming in from Krishna. Okay, it's a very relevant question actually. Will restructuring my personal loan as offered by the RBI as an option, will it affect my credit score despite timely payments? And I think when he says timely payments, I'm assuming he means after the restructuring exercises, if he's been properly making the payments that they have sat across the table and tweaked upon, still will it hurt his credit score? Basically, will this restructuring exercise hurt his credit score? Mr. Khosla?
No, it will not impact your credit score at all. In fact, if anything, if you stick by the terms of the restructuring, which means you, like you were saying, that you intend to pay up the installments on time, in fact, it will improve your credit score. It is something, that's why we say that either if you don't need restructuring, don't avail of it. But if you do, then stick by the terms. Your credit score will indeed improve, and also the same bank with whom you have restructured your loan and you repaid the installments online, they'll be only too happy to entertain you for any further credit that you might want to avail. So yes, no impact on your credit score at all. Head held high, as it were.
Okay, great. All right, Mr. Khosla, many thanks for joining us today on the Money Show and, breaking down all the announcements by the RBI, the option as well available for all borrowers, in such a simple manner. Thank you so much for joining in.
Thank you.